In today's video, I am going to show you guys my best scalping strategy that will make you profits like these on a daily basis. This strategy has the potential to grow your account by hundreds of % in a matter of days. It's a simple strategy, but in order to use it successfully and profitably, you must consider several important factors, which I will explain in this video. Be sure to watch the full video to make sure you don't miss anything. And I will also backtest this strategy 100 times on the GBP/USD chart to find out its real win rate. So without further ado, let's get started with today's video. The first thing you want to do is open the trading view and select the pair you want to trade. Choose whatever pair you want, as this strategy works well on any pair. Next, select the time frame. For this strategy, you can use any suitable time frames for you. Here I've opened a 3-minute chart of the GBP/USD, but feel free to experiment with other time frames. Alright, so now let's add our first indicator to our chart. Okay, so let's start by adding the RSI indicator on the chart. For adding indicators to our chart, here we click on Indicators tab and type RSI in the search box. Add it to the chart. I'm going to make some changes to its settings, so go to the indicator settings. Change the RSI length to 8. And in the Style tab, untick the RSI based moving average. Also, I'll make the RSI white to make it more noticeable. In addition to the RSI indicator, we will also use a simple moving average as our second confirmation indicator. Alright, so let's add our second indicator, the simple moving average. This one, add it to the chart. Now click here on the indicator settings, and in the input section, change its length from 9 to 200. This 200 period moving average will help us to identify the short-term trend. So when the 200 period moving average is above the price, it represents a possible bearish market and a downtrend. And in a downtrend, we will look for selling opportunities when the RSI value is over 70 or overbought condition. We will ignore the buy signals at all times in a downtrend. And when the 200 period moving average is below price, it represents a possible bullish market and an uptrend. And in an uptrend, we will only be looking for buying opportunities. And these buying opportunities will occur when the RSI readings are under 30 or oversold condition. We will ignore the sell signals at all times in an uptrend. And when the 200 period moving average is going right through the price, it represents a directionless sideways market or a period of consolidation. Now that we've covered the premise of our strategy, let's move on to the entry and exit rules. Let's start with the rules for entering long positions. First, the price action must be above the 200 period moving average. Second, look at the RSI indicator to see if the RSI line is below 30 or oversold condition. Then, look at the closing candlestick to identify if it's a good bullish reversal candlestick. But you need to look for a bullish reversal candlesticks like hammer, bullish engulfing, morning star, or bullish harami formation. Once you see a suitable bullish reversal candlestick pattern, you can take a long position. You can set the stop loss just below the low of the previous candle, and our take profit would be 2 times greater than the stop loss. Now let's understand the conditions for entering a short trade. Entering a short position is the exact opposite of entering a long position. First, the price action must be below the 200 period moving average. Second, look at the RSI indicator to see if the RSI line is above 70 or overbought condition. Then, look at the closing candlestick to identify if it's a good bearish reversal candlestick. Once you see a suitable bearish reversal candlestick pattern, you can take a short position. You can set the stop loss just above the high of the previous candle, and our take profit would be 2 times greater than the stop loss. Let's look at some examples to help you understand. Here the price action is below the moving average, so here we'll only look for selling opportunities. And here the RSI has entered the overbought zone. And as you can see here, a bearish engulfing pattern has formed, so all the conditions are met here on this candle. We will open a short order at the open of the next candle, set the stop loss just above the high of the previous candle, and our take profit would be 2 times greater than the stop loss. Let's see another example. Here the price action is above the moving average, so here we'll only look for buying opportunities. And here the RSI has entered the oversold zone. And as you can see, a hammer candlestick was formed here, so all the conditions are met here on this candle. We will open a long order at the open of the next candle, set the stop loss just below the low of the previous candle, and our take profit would be 2 times greater than the stop loss. Okay, so now that you know the trading rules, let's start testing the strategy 100 times. So please watch the video until the end to see how much money we can make with this strategy. Okay, so I did 100 backtests, which took about 1 month, and the results for the strategy are really good. As you can see, the strategy had a 64% success rate, which is crazy high for a short-term trading strategy. The most wins in a row is 8, and the most losses in a row is 4. We started our account with $1,000 and risked 2% on each trade, and the total gain on the account was 184%, which was quite incredible for a short-term trading strategy. So this strategy was pretty good. In conclusion, the moving average and the RSI can be powerful tools for intraday forex trading when used correctly. By following a strategy of buying when the market is oversold and selling when it's overbought, traders can improve their chances of success. Remember to always set stop losses and consider the risk-reward ratio of each trade. Thanks for watching.